portion of Fox 43 AM Live is sponsored by Endeavor Private Wealth.
We're back with Chris McGee, Managing Partner at Endeavor Private Wealth, for this week's segment on investing and wealth management. Chris, good morning.
Good morning.
So the stock market has been on a roller coaster of late, turning in some pretty dramatic ups and downs in recent weeks, within the same week and sometimes even within the same day. That's causing a lot of discussion about the impact that just a few stocks, the Magnificent Seven, are having on the market's performance. What are your thoughts on this matter?
Dane, it's good to be back with you and our viewers. And you're referring to a topic of significance, interest, and debate known as concentration risk, which is defined as the potential for loss due to overexposure to a single stock, a group of stocks like the Magnificent Seven, a particular sector of the market, or a geographic region. Owning a very large amount or a concentrated position relative to your other investments an investor owns can increase vulnerability to market fluctuations and economic downturns. On the other hand, concentration risk can also generate excess returns, especially when leading companies like the Magnificent Seven outperform.
Isn't diversification a type of financial anecdote or moderator for concentration risk?
It certainly can be. However, large cap U.S. equity indexes like the S&P 500 have become increasingly top heavy, with a combination weight of the Magnificent Seven comprising more than a third of the entire index at times. The S&P 500 is a market cap weighted index which allocates the greatest weight to the largest and most successful companies. When concentration intensifies due to narrowing leadership, the diversification effect lessens and the index becomes more prone to asymmetric or less evenly distributed risk.
What's driven the rise of the Magnificent Seven?
Earnings growth has been a major factor. For the third quarter of this year, the Magnificent Seven reported actual earnings growth of 18.4% compared to 11.9% reported by the other 493 companies in the S&P 500. Not shabby by any means. I should add that the earnings growth rate for the Magnificent Seven has averaged a whopping 28.8% over the previous 4 quarters. For the other 493 companies, last quarter was just the second time over the past 3 years that they reported double-digit earnings growth.
Are there other factors that may explain the rise of the Magnificent Seven?
The companies focus primarily on investment themes such as AI, cloud computing, digital advertising, and e-commerce. They also appeal to many investors who prefer size and scale, strong balance sheets, and pricing power.
What about potential downsides?
Investors can get easily spoiled and expect more of the same outsized performance. However, if or when growth moderates, or if the companies encounter unexpected regulatory or other disruptions to their business model, their performance can reverse, perhaps very dramatically.
So what can investors do to mitigate the concentration risk in their portfolios?
Investors should understand their actual risk exposure, which can be analyzed using risk decomposition tools that identify concentration. They may also consider using equal weighted index investment strategies, provided that they are comfortable increasing their investment exposure to smaller capitalized companies or those with a value rather than growth orientation. It may also be helpful to set guidelines for limit the maximum position size or sector size that they will own, and then rebalance their portfolio if and when those limits are reached.
And Chris, before we wrap up, any final thoughts you'd like to share with our viewers?
I can't stress enough that investors situations are all different. Their objectives and risk tolerance are all unique, and that's why I believe investors may be well served by consulting with a trusted financial professional who can help them to deal with concentration risk, but also a myriad of other portfolio risks that should be managed.
Well, thank you, Chris. And as always, we appreciate your time. And everyone, to learn more about Endeavor Private Wealth, visit EndeavorPW.com.
The preceding portion of Fox 43 AM Live was sponsored by Endeavor Private Wealth.